seen, the sector's generally been really good at kind of talking to ourselves, and often when we put good research out, we all nod and go, this is fantastic, and so on. But we've got to get beyond our walls, and in the end, having a robust conversation with the consumers in New Zealand about money, about what it does, about what it means, in a holistic way that kind of picks and unpacks some of the myths and the legends, and actually facing into some of the hard issues, is something that we started this, as a discussion last year, and delighted that Money and You 1, 2 and today 3 has been able to lead a conversation. It's really interesting because today I've just been doing lots of various media interviews, and when you're talking to journalists who kind of cover lots of different things, they're actually asking some really good quality and searching questions, which are kind of, some of us will go, oh, that's a little bit obvious, but I think that's the whole point. The money stuff, and we speak about the language of money and where do you learn it and how do you learn it and how do you demystify the jargon. Those kind of conversations kind of start around kitchen tables. They don't start when you kind of buy your first house. But we'll go into a little bit of the finding of the research. But, we started this year going out to over 2,000 New Zealanders, and that created Money and You 1. We then did 2 as we went into lockdown, and the interest was huge. One of the things we understood right up front is that we actually had some source data before we went into COVID. So we actually went into market in very early March. We had people almost now with the benefit of hindsight, just before we went into lockdown. And I think all of us thought and understood that it was going to be really tough going across New Zealand. I mean, it was pretty uncertain. It's still very uncertain. And so what that did was it spawned a financial resilience index, which came out of Money and You. And we did it once, we did it twice, and we did it 3 times. And we want to understand people's thinking about money, their job security situation, their savings habits, and so on. All of that stuff came together really nicely. And so there's now a body of work on Money and You 1, 2 and 3 and Financial Resilience 1, 2 and 3 that within the research committee, and we're delighted to actually have not only our chairs of our research committee, but so many of the FSC committee here today, because it's really the lifeblood of our ability to influence stuff and take on big issues and actually go forward with them. So on that note, I'll come back in a moment, but we can't do these things without partners. Most of the work we do in the FSC is driven by members and for members and for the sector. Big thank you to TE for backing us on this research. I think it probably landed a whole lot better than we perhaps thought it would. But hey, that's what sometimes happens. So Ryan, welcome, and some comments from you. Thank you.
Thanks very much, Richard. This is a pleasure to be up here to speak to you, and particularly after so many months not being able to come to these types of events. It's great to be in the same room and shake hands and be able to talk to people about what's actually happening in the industry. For us, the Money and You Consumer Research Series has been great because the type of business we are at TE, fiduciary business, and a business as a supervisor and an administrator in the funds industry, we always see the market from the consumer angle in that fiduciary duty. And it's also good to be here to celebrate the end of the year. Obviously, we have a strong partnership with the FSC, and really endorse the important role that they are playing in connecting the values of we in the industry to the wellbeing of the communities that we serve. As a strong supporter of financial literacy, trustees know that the ability for consumers to make informed decisions is enormously important, and the use and management of money not only influences how we save and borrow and invest, but this research has really shown that of the significant implications that we have and that money has to people's overall well-being and lifestyle choices. As a research sponsor, we welcome the opportunity to be involved in this. As a trusted company, as I said, it ties back to this concept of the fiduciary obligation we have as an organisation, and for us very strongly about how we see and always have seen the benefit of having good financial advice behind financial products. And I think that's the key to what we've seen come out of this research. And going back and dispelling some of the myths about financial services, and the fact, particularly in Money in Year 3, about this concept of needing to have assets before you seek financial advice, and the concept of actually seeking financial advice in your accumulation steps is enormously important. As much as advisors can help making sure that people have investments that are appropriate for the goals and their needs, we can also protect them from some of those behavioural mistakes, and part of that is through literacy and education. And we saw through COVID the panic selling in early stages. Trustees Executors, we provide investment administration services to some of New Zealand's leading Kiwi Saver providers, and over COVID we saw the volumes of switches increase up to 20 times greater than they are normally. That's around, for us, it was around 7,000 people a day, what we call panic switching, mainly from growth into conservative funds. But the issue there is ultimately locking in their losses when the market corrected. And to me, that's just a fundamental sign that there needs to be greater literacy and greater access to advice for members and consumers. So this research shows, particularly for Kiwi Saver balances, can be sometimes up to 52% higher for those investors to seek advice, and in the end that makes a lot of difference. And our challenge as an industry is to make this advice available to all Kiwis, as well as encourage financial education at all levels to foster literacy, whether that's financial education at school, in the home, or even in the workplace, to foster that literacy and to broader, and not only to select, but to the broader population. So the insights from this piece of research are not only valuable today, but I think we'll get insights that will be useful, or have insights that are useful for the years to come. And I'm very pleased that Trustees Executors can be involved. We look forward to our continuing support and gaining more insights over the coming years with more research that comes along. Without further ado, let's see what we've got.
Thanks, Ryan. Okay, so it's a really nice segue to welcome our partners from the FMA who are in the room, our partners from the CFFC who are in the room, because I think this conversational literacy is a whole of sector response. It's actually not just the sector in separate from anybody else. I think, and in fact this week we've had now a number of conversations where if we could actually line up this discussion, how powerfully could we shift the dial if you've got the lawmakers, the regulators, the commission, the sector working on behalf of really ultimately New Zealand, and I think that's the ambition, and I do think it's something we can make a difference on. So Money in Year 3, let's just talk briefly about it. It really focuses on the notion of advice, or the advice gap. The story goes like this: there are about 20%, 18.5% to be exact, of consumers get advice. And you look at that and you go, that's just crazy when you look at what some of the benefits are. What's the story that sits behind that? So let's just unpack it. At the moment, most of the triggers for people getting advice are around things that happen in their lives. Property purchase being the main one, and it's still only about 25%. So if it's about life triggers, buying property, having kids, opening businesses, stress in your life, there's a conversation there, I think, as a sector we've got to undertake about how we actually tell the story about what's important about advice and when are the things and when are the opportunities to get advice. Anecdote of one came up in a conversation earlier today. Settled on a property last month, took out a decent loan. Loan discussion, loan rate, no problem at all. General insurance discussion, no problem at all. Life insurance discussion, didn't enter the conversation. And so when we think about good customer outcomes, when we think about what's the right thing to do for consumers more broadly, it's got to be a holistic conversation. And as a sector, we've got to make sure that we are having all of these conversations all of the time at the right pointers. The advice gap is absolutely real. So let's just tease into that a moment. Actually, that's some of the data, just to give you a sense of it. All of those numbers, to me, the surprising thing for me is that all those numbers are pretty well low down. Because if you invert them and flick them around, you go, how come only this amount of people are actually having the conversation when we're in the middle of a housing boom? How come it's not a much more certain piece on that? So I think again, unpacking this for us as a sector, determining how we have more relevant conversations with the New Zealand community, I think is going to be really important. So let's just talk about the advice gap. So there's the data. Again, I was asked often today on the media, that's that last box and the second last box from the right. Why do so few people have a view? I don't get it and I wouldn't consider it. Is that a number that's a fair number? To the next number of 35%, I have received it, but I would consider it. I've never received it, but would consider it. What are we doing as a sector to try and communicate effectively with those people? And then, of course, there's a less than 20% group that actually are in an advice relationship. And again, this is a whole of sector opportunity here. So one of the things we found about in Money in You One is that it's not about money, it's about you, right? So most of us think, or most people think, your financial life is divorced from your non-financial life. Now, we know that that's a silly conversation to have because, of course, it's completely tied up together. But when people on the outside who are not really steeped in this discussion think about it, they go, my money life's very different and I don't think about it. And the anecdotal feedback that you get is, look, I'm not sorted, I don't even talk to, I'm not really ready. Actually, some of the most powerful benefits of getting good quality financial advice over a sustainable period of time is not about the money stuff. It's about the sense of confidence, it's about the sense of control, it's about the sense of making decisions and achieving goals for you and your family. And again, we've now got some quite clear evidence, and again, it's not just a confidence conversation, it's a wellbeing conversation. So we've got to ground our conversation around money in the sense of wellbeing and focus and opportunity, and I think that's some of the conversation that comes out here. Is advice valuable? Again, in Money in You 1 and 2, what we found was that, again, this is evidenced by the people that filled out the forms, so don't take it with a grain of salt, but understand this comes off the back of an investment year, which is 2019. 2019 was a purple year in investments, but pretty much the numbers said that there was a 4% outperformance when people used advisors or advice compared to those who didn't. This is a significant benefit. Now, you're not going to sustainably outperform in an investment sense every year by 400 bips. We kind of know that, right? But to Ryan's point a little earlier, the decision to make the right call about where to invest was equally balanced by the decision to not flee for the hills when the market tanked, and understanding that in Kiwi Saver, 2020 was the first time in the life of Kiwi Saver where we had, albeit fairly narrow, but a really sustained downturn, and we didn't really know it was going to go. And the switches that turned up, the phone calls that turned up, all of that kind of stuff that turned up totally just is the barometer or the temperature check of people don't have the confidence to know what's the right thing to do. So instead of investing when the market tanks, people were fleeing for the hills. Now, of course, not everyone, but the sense of guidance and advice that people got from a good and trusted advice relationship not only meant that they held their course, but we've now seen markets bounce back, and we kind of know what that's meant for people. So I think really important to get that out. It's not only making the right decisions, it's helping people to not make the wrong decisions in an investment context, but it's not only about that. So the value conversation is important. The value conversation is important because the three key reasons why people don't get into the advice conversation, it's only for people with money, right? Second one is it's too expensive. And the third one, which really comes out of the conduct and culture conversation, which is around trust. Who's the right person to deal with? How do I know that they got my best interests at heart? So I think when you package those things together, you end up in a really powerful place to understand, what the drivers are, but also what the value is, and also what's not happening. Kiwi Saver is a game changer. We've come from a, albeit standing start 12, 13 years ago, and in terms of ubiquity, Kiwi Saver is the product that most people have, and it's the conversation, therefore, that most people are happy to get involved with. And it's a holistic conversation. It's about return. It's about retirement. I can see Jane somewhere. It's about retirement adequacy. It's about where you land up. It's about your journey and your pathway to that point. And I think the greater and the larger Kiwi Saver grows, the more important this conversation is in the end going to be. You can see the rest of it, and some of those things probably wouldn't be overly surprising to this audience. If we just segue from the investment conversation to the insurance conversation, again, pretty compelling piece here. And again, segues from a conversation earlier today. We know that insurance advice, be it health or life, insurance for all of us tend to be a bit of a grudge purchase, and we kind of understand the reasons why we do it. But the drivers for that and the advice component that sits in there, compared to the people that are unadvised, not only more people get advice, more people have higher and more appropriate levels of advice. In terms of the research that we did for this discussion today, the average balance for a first home buyer is around 400 grand mortgage, but obviously people are carrying a lot more than that if they're not a first home buyer. That's a lot of life cover, that's a lot of trauma cover, that's a lot of income protection cover of things that could go wrong if people don't adequately insure. And having that conversation in the same way that we have earthquakes, volcanoes and fires and eruptions and so on, as we do on the general insurance side, so much so it becomes relevant on the life insurance side. And again, I think there's a whole bunch of work for us to collectively do. I spoke a little earlier about the non-financial benefits of financial advice, so I'm not going to overly go into this, other than to say, the data is pretty compelling. 84% of people in Gen Y say it gives you greater peace of mind financially, and that's just the financial benefit. So not only the data set really compelling at a demographic piece really important. And again, I think it gives us some pretty interesting signals as a sector to how we communicate effectively with New Zealanders at all stages. I was asked today by a number of the journos, so why don't people, if all this stuff's true, and we've no reason to doubt it isn't, if it's all true, how come people aren't flocking to their financial advisors? And I think that's part of the question we have to ask ourselves about, how we tell the story, how we narrate the story, how we get the benefits of getting good quality advice. And I think the conversation for us, which we've been exploring was inside the FSC, it's not just about financial advice from the real life advisor, and welcome to those of you who are in the room. But it starts a whole lot earlier with this kind of education and capability and literacy, because when you start it early, people, when they reach the point where they have the need, they're actually confident enough to get into the conversation. It might be with an advisor, it might start off on a sorted or the FMA side or through the FSC or one of the product providers, but it kind of starts that discussion, and I think that's partly where we've got to think in a holistic sense about where we go with this kind of intel, rather than just seeing it as a money conversation. And that's probably a nice way to close this part of the discussion before I introduce Thomas and Trish, is we started this year going, we want to understand what New Zealanders think and feel about money. It's spawned, like I said, the 3 pieces and then the 3 pieces of financial resilience. We're now going to go back into field. The research committee kind of met today. We're starting to brainstorm that stuff as we head into 21. But I think this provides a really good platform for a long-term and sustainable discussion with how do we make, in the end, New Zealanders more confident, financially capable, so that they take care of their health, their wealth and their wellbeing in a much more sustainable and productive way. And I think that's part of our ambition and part of what's in our collective really remit. So that's really the devil's advocate challenge. Are we up for the challenge, and can we do it?